Taxes are a part of life in Canada. We pay taxes to support important things like healthcare and education. But wouldn't it be nice to keep more of your hard-earned money? The good news is you can. By understanding how to reduce your taxable income, you can keep more money in your pocket. This means more money for the things you love. Think of it like this: you earn money all year round. The government takes a portion of that money as taxes. However, there are legal and effective ways to lower the amount of money the government takes. These are called tax deductions and credits. By taking advantage of these deductions and credits, you can reduce the amount of your income that is taxed. This can result in significant savings come tax time. Remember, you earned your money, so it's important to know how to keep as much of it as possible. One of the best ways to save on taxes is through a registered retirement savings plan, or RRSP. Think of an RRSP like a special savings account for retirement. When you put money into an RRSP, you get a tax deduction. This means you lower your taxable income for the year, which could lead to a larger tax refund. The money in your RRSP grows tax-free until you withdraw it in retirement. For example, let's say you contribute $5,000 to your RRSP. Depending on your income, this contribution could lower your taxable income, potentially saving you hundreds of dollars in taxes. Over time, those savings can really add up. Did you know that you can deduct certain work-related expenses from your income? That's right. If you're employed, you may be eligible to claim expenses related to your job. This includes things like home office expenses if you work from home, union dues, and certain supplies required for your job. You can also deduct the cost of moving if your new job is at least 40 kilometers closer to your new work location. By keeping track of your eligible expenses and claiming them on your tax return, you can reduce your taxable income and keep more of your hard-earned money. Always remember to keep your receipts and consult with a tax professional to ensure you are claiming all eligible deductions. Tax credits are another powerful tool for reducing your tax bill. Unlike deductions, which lower your taxable income, tax credits directly reduce the amount of tax you owe. One of the most valuable credits is the basic personal amount. This non-refundable credit provides tax relief on a certain amount of income for every Canadian resident. Other credits include the Canada Employment Amount, which helps cover work-related expenses, and the Caregiver Credit, which provides support for those caring for dependents. Remember, understanding the various tax credits available to you is crucial for maximizing your tax savings. Don't hesitate to seek guidance from a tax professional to determine your eligibility and optimize your tax strategy. Section 5. Giving back and getting back. Charitable donations. Giving back to your community not only feels good, but can also save you money on your taxes. When you donate to a registered charity, you receive a donation tax credit. This credit can be used to reduce your tax payable. The more you donate, the larger the credit you receive. It's a win-win. You support the cause you care about and get a financial break at tax time. For example, if you donate $100 to a registered charity, you could be eligible for a federal tax credit of 15% or $15 plus a provincial credit depending on where you live. Over time, these credits can make a real difference in your tax bill. Section 6. Owning your home, owning your taxes. Owning a home in Canada comes with certain tax advantages. While you can't deduct your mortgage payments, you can deduct certain expenses if you work from home. If you have a dedicated workspace in your home, you may be able to deduct a portion of your home-related expenses, such as utilities, property taxes, and insurance. This can add up to significant savings, especially for those who work remotely. Additionally, if you sell your principal residence, you generally don't have to pay capital gains tax on the profit. This exemption can save you a substantial amount of money, especially in a rising housing market. Section 7. Investing in your education. Investing in your education is an investment in your future, and the Canadian government recognizes this through various tax breaks. If you're a student, you can claim tuition fees as a non-refundable tax credit, reducing your tax payable dollar for dollar. You can also claim education and textbook amounts, further reducing your tax burden. Moreover, if you have a registered education savings plan or RRSP for your child's education, the investment income earned within the plan grows tax-free until withdrawal. This allows your savings to grow faster, helping you save for your child's future education. Section 8. Medical expenses relief when you need it. Facing high medical expenses can be stressful, both financially and emotionally. Thankfully, the Canadian tax system provides some relief through the medical expense tax credit. You can claim eligible medical expenses that exceed a certain threshold of your net income. This includes costs like prescription drugs, dental care, vision care, and medical equipment. While nobody wants to face unexpected medical bills, claiming this credit can help alleviate some of the financial burden and provide much-needed relief during challenging times. Keep all your receipts organized throughout the year to maximize your claim. Section 9. Ready, set, save your tax reduction plan. Reducing your taxes isn't about finding loopholes, it's about being smart and informed. By understanding the various deductions, credits, and strategies available to you, you can keep more of your hard-earned money and achieve your financial goals faster. Here's a summary of key steps to get started. 1. Track your expenses. Keep meticulous records of all your income and expenses throughout the year. This will make it easier to identify potential deductions and credits when filing your tax return. 2. Maximize your RRSP contributions. Contribute as much as you can to your RRSP to benefit from tax deductions and tax-sheltered growth. 3. Explore eligible deductions. Research and claim all eligible deductions such as work-related expenses, charitable donations, and medical costs. 4. Understand tax credits. Familiarize yourself with various tax credits like the Canada Employment Amount, Tuition Tax Credit, and Caregiver Credit to reduce your tax payable. And 5. Seek professional advice. Don't hesitate to consult with a qualified tax professional to create a personalized tax plan that aligns with your financial situation and goals. By taking a proactive approach to tax planning and staying informed about the latest rules and regulations, you can ensure you're not paying more taxes than necessary. Remember, knowledge is power when it comes to saving money on your taxes.